Hello everyone, this is Kyle Taylor with my analysis of the market structure of orbital launch vehicles or rockets, which SpaceX belongs to. Here's a picture of me right after a mountain bike crash that I'm showing you to prove that this is me. I believe that this market structure is an oligopoly for a number of reasons. There's relatively few sellers that hold really any significant stake in market share. Products are differentiated in terms of design and technology. The barriers of entry are very high because of massive startup costs. Firms must comply with really strict government regulations, and there is a very infrequent amount of transactions. There really isn't any advertising from these firms because their consumer base is so limited in particular, and they're already covered in the press pretty well. And there is some price control. It depends on the differentiated quality of the product, and they do have to act in interdependence with each other. And act in strategic ways. And here's a pie chart of every known launch in 2017. As you can see, there's a couple big pieces of the pie. We have Falcon 9 right here, which is the premier rocket family from SpaceX, with 18 launches, the most of any. We have Long March over here, which is the premier rocket family from Chinese Space Agency. And Soyuz down here is the premier rocket family from Russia, which are both nationalized space agencies. And then in fourth place, you have H2 from Japan, Mitsubishi. You have Atlas V, which is an American commercial company for a rocket from there. United Launch Alliance, which is SpaceX's main domestic competitor. And then you have Ariane 5, which is from Arianespace, which is a European space company. So to further show that this market structure is an oligopoly, we can put it to the test of the four-firm concentration ratio. So I took the four largest firms from that chart of 2017 launches, and I took 18 with SpaceX, 16 with the Chinese company, 15 with the Russian company, and 6 from whichever one of the fourth ones we pick. So that came out to 55 out of the total of 90 total launches in 2017, which comes out to 61% about. So the four largest firms in the market accounted for 60% of the entire market output, which would distinguish this market as an oligopoly. The source of revenue for SpaceX is almost entirely launch contracts for telecommunication companies, which they would send satellites up for. They also are hired by NASA to resupply the International Space Station, and also the U.S. government and military uses them a lot for their programs. SpaceX does have to deal with fixed costs such as depreciation of equipment and buildings, insurance premiums, rental payments, etc. They also have to deal with variable costs, which are different from fixed costs because they are affected by the amount of output that the company puts out. For instance, fuel, materials, labor, transportation, and launch site access. Each marginal launch that this company does, these costs go up. In 2017, the total costs were approximately $900 million. Though SpaceX has quite a big amount of economic costs to overcome in order to make an economic profit, they have last year. The average launch for SpaceX is they earned about $72 million for it. So by their 13th launch, they hit about the $1 billion mark, which overcame their costs. And they had 5 consecutive launches after that, which increased their economic profit. Now, since SpaceX already is making an economic profit, they could make an even greater profit if, say, in 2018. They were to make a greater technological development that serves to reduce the rate of failure. This would bring their average total costs down because their average variable costs, such as fuel, materials, and labor, are expended with each launch. So say if one launch fails and they have to relaunch, that would be twice the amount of variable costs for that launch. So technological developments increasing reliability of rockets would shift the average total cost curve downward, which would increase the firm's economic profit even more. Being an oligopoly, SpaceX doesn't set its price where marginal revenue equals marginal cost. They want to make a profit. They don't want to make just a normal profit. And they can because their demand is so inelastic. So they set their price on this line up where it meets the demand curve. And the difference between their price or average revenue and their average total cost equals their economic profit. So, with the lowering of their average total cost from their increasing reliability from their technology, they would gain an even bigger economic profit than before.